Okay,
Yeah,
guys, we're back.
I think I was supposed to be inviting you and it didn't work out.
Okay. All right. Sorry for the technical difficulties. We popped out of StreamYard, popped back in, and now it's working perfectly. I say that, but we'll see.
Yeah, I think you're frozen.
Right. It is Wednesday at 7 o'clock. This is the Joannie COVID version. I'm fine. I just sound bad. And I'm drinking a lot of like regular Cokes because those make me feel better.
There you go. Whatever it takes.
I know, right? And so Sweet Blakely, with certainty, is going to carry this for me. And we're going to talk about first-time home buying process. And I wanted to get an update on what's going on with the interest rates for investors and second home purchases. So can you give us the latest and greatest on that one?
Yes. So we're going to start with the rate update. So it's been kind of crazy back and forth. We've been on a bunch of different market and rate calls. We were originally told in the market and the finance industry that the rates were going to take, the higher rates were going to go into effect on April 1st. And they actually ended up rolling out, and we saw a huge difference in the market on the 11th, so yesterday. So it does not impact somebody that's buying a primary residence. It's single family residence, high balance loans, which is jumbo loans, and then if you're buying an investment property. So the amounts change. So I don't want to give any kind of number and freak you out. Depending on the LTV and what type of program, if it's jumbo, if it's second home, if it's an investment property, there is a different hit, but just kind of as an idea. Whereas before I'm looking to buy a second home, we're looking at beach condos and we did not do it soon enough. So where before we were looking at, say, a 3.2 or 3.5, 3.6, whatever the rate was. Now, instead of a 0.250 hit for a second home, there's a 4.25 hit, which is ginormous. So it's like an increase that nobody knew would be as large as it is. Now, like I said, depending on the loan to value, with second home, you can do as little as 10% down. So if you go up to 20, 25%, if you're at 10%, the hit is going to be different. Same with the investment property. The investment property pricing is going to be different than what the jumbo pricing is going to look like and what the second home property is going to look like. So if you have questions or if you want just some basic numbers run on investment, second homes, or jumbo loans, let me know. I will tell you the jumbo pricing is the pricing that we saw the least adjustment with. So our jumbo rates are still very low for jumbo. You could still get jumbo in the 3. We're seeing the investment and the second home rates, take the largest hit as far as the increased interest rate.
Okay, so let's play a game on that one. Since I closed on, my voice sounds terrible. Since I closed on Fraser on December 29th, and I'll just say my interest rate, let's say, was 4.5. What would it have been today?
And of course, Joannie, we're going to keep this in mind. Depending on, like I said, credit and loan to value, it's going to change. So like someone that may have, say, a 740 credit score that got a 4% previously, they probably now are going to be 5 to 5.5. Now, that is the pricing that I'm giving is par, which means I always quote not charging the borrower anything. You absolutely can still have the option to buy your rate down, but the costs are going to be high, depending on the loan amount. Again, we can kind of break down what the cost would be. You do have the ability to use discount points and to buy down the rate, but there is a large hit now that was not in existence before.
So let's get our crystal ball out. And why? Why now? Why did they do that?
We still are not certain as to why. I don't know if they saw a change in the market and they decided to roll it out quicker than what we expected. I have a whole article on it that I've posted on Facebook, but I can share in the chat box that breaks down the cost difference with the high cost loans and the investment properties.
That's awesome. Yeah, we'll do that for sure. So I wanted to just make sure that we had the biggest update today about what's happening real time in the market. And Blakely's always amazing with that, giving us that information. So that is like the news you need to know as far as interest rates, second homes, and investment properties. So I wanted to make sure you guys got that info.
Yes, and like I said, if you're looking for a home or a second home or an investment property, and you have an amount that you're thinking you kind of want to see a price, we can absolutely work up a quote just so you can see what the general numbers would look like.
Awesome. Okay, so now we're going to transition into our topic for tonight, which is first-time home buyers. And we're going to talk about different tips and tricks, and we're going to bring it way down, like as basic can be, because I know sometimes as an agent, we do this all the time, and we forget that this is literally like a college course. And we need to take it down to, here's the rubric, here's the syllabus, this is what it looks like, this is what to expect. It's a huge process. So tonight, I just wanted to really break it down to, when you're thinking about buying a house, what are you supposed to do? What's your first process? So when somebody calls me up and says, hey, I think I want to do this, the first thing I do is I get excited for them because it's amazing. This is something that you're going to do maybe 4 times in your life. And you're not renting. Because when you rent, you might as well just be opening the window, throwing cash out. So putting yourself in a position for success is home ownership. And that's what Blakely and I like to provide for people. And it's really, really, not to be sappy, but it really makes us happy to serve our people. And being a first-time home buyer really fits into that warm, fuzzy spot for us. So I think does that make, for you, Blakely, warm and fuzzy?
Yes, we did one not too long ago, a Facebook Live on a Wine Wednesday, and we went on and on and on. We were loving talking about our first-time home buyers. Yeah. So I'm not going to say that they're my favorite, but they definitely need the most hand-holding, and it's very rewarding with a first-time home buyer when you get to the finish line, because the people that have done it before millions of times, not that they don't appreciate you, but it's not the same appreciation as working with the people that are purchasing for their first times, who we're walking through, the beginning to the end with. So yes, we will absolutely break it down. So Joannie, do you want to start with how they come to you, and then how you kind of lead them to me?
Exactly. So the biggest thing that I do first is we just have a conversation. I usually will take you out. We'll have lunch. We'll have breakfast. I have a buyer's presentation. We go through all the steps, and then you are kind of ready, because then I hand you off to Blakely. And the biggest part about this is when you have that buyer's packet, go through it. It's not just paper. It has definitions. It's almost like your homework, because there's so many moving parts that you kind of keep having to go back to page 1 and see, like, well, what do I need to do next? And what's next? And the biggest thing is what can you afford? Like, there's no sense in shopping for a new car if you don't know what your budget is. And that's when numbers and stuff get kind of weird, because there's different things that you don't necessarily think about. And the number one thing is, when you're buying a house, you do not pay for your agent.
We get that a lot. Yes, we get that question a lot from especially first-time home buyers who don't know
exactly. Technically, we're free, because the house you purchase, the commissions on that house get broken in half, and the buyer gets half, the seller gets half, as far as the brokerages and the commissions. So don't think that as a buyer that you have to pay your agent. You don't, unless there is some kind of contracted obligation, which there usually isn't. So basically, buying a house, don't do it alone. Get a professional and get an agent, because it's free. And then I'm going to give you a trusted advisor like Blakely to go over the finances. And I think the biggest question is what do I need? Like, what kind of money do I need, and what's it for? So that's what we're going to start talking about, is the process, and I'm going to have my whiteboard, and we're just going to do a real basic breakdown on like a house. So the process,
Perfect.
so I'm going to have the conversation. We're going to talk about what you think your budget is, what you need, and then I'm going to physically, literally connect you with Blakely. There will be no question about what you're supposed to do next. And so you're going to have your call with Blakely, and it goes something like this.
Yes. So Joanie will connect us, like she said, via email, a phone conversation, a conference call, a Zoom, so that you know who I am and I know who you are. And Joanie will kind of give me your basic situation as far as what you're trying to accomplish. Then at that time, I will go over the first steps. Sometimes I probably explain too much, but I think that is very helpful, especially for first-time home buyers. So what we do up front, you've talked to Joanie, we've had our initial conversation. Now we start with the online loan application. So that is the number one step. Right now, pretty much any bank or any lender is doing the loan application and the approval process all online. You're not having to go in and sit down. We are more than happy, and me and Joanie have done this multiple times, to do a buyer's consultation with both of us in the office so that we're all on the same page. But as far as the approval, you absolutely do not have to come in and meet face to face. It's all done online.
Exactly. And then, so what's the biggest question people need to know from you?
So I would say the biggest question, and the question that we get the most, is what is required for a down payment, or what is required for a the cash to close amount. The number changes. Obviously, you need more or less depending on purchase price and down payment amount, but you could go into a transaction with as little as 3% as your down payment. And that is a conventional loan. So there are different stipulations and guidelines as far as qualifying for that lower down payment option. You're not going to be able to make $500,000 a year and only put 3% down. But as long as you fall within the different caveats that they require, you are able to do the 3% down normally, either as a first-time home buyer or as long as you're within those income limits. If that is not an option, there is the FHA 3.5% down program. And then there's different tiers with the conventional. You could go to 5%, you could go to 10%, all the way up to whatever, 60% if you wanted to. So the down payment will change. And what me and Joanie do with all of our clients, I will give them the max amount. As far as everybody wants to know the max amount that they can qualify for a car, for a home, for a boat, whatever the case may be. So we go over the max amount of approval that we're able to offer. We then, and not everybody does this, some people give you the max amount and they say, okay, go on your way, start looking. We make sure that you are comfortable with your mortgage payment before we move forward. What I mean by that is upfront, I will ask all of my clients, what is a comfortable monthly payment for you with taxes and insurance, HOA, everything included? We then finalize that number and we get on a call or whatever meeting with Joanie, and we let Joanie know. They are approved up to this amount, but monthly we know they want to spend this amount, so we're going to stay around this price point. Joanie, do you want to talk about setting up the search kind of after that once we've...
Exactly. So now that we've established that you can go shopping, because truth is you might not be ready. After you talk to Blakely and after we've established, where you're at, what the fitness level is as far as your home search, you might need to get a gift. You might need to have a little bit more capital. But once we've established that and we figured out, I really like the break it down to what is good for you on your monthly payment and work backwards. Once we've established that, then we figure out what price home are we going to go for. So we're going to go for, let's say, a $200,000 home. So then I'm going to search in all my search engines, and I'm going to send you listings that fall within that. And then you get to put a little heart on it. You basically get to go shopping, like online shopping. And then once we establish what you want to see, Your portal is created, and then we start to go look at those homes. Now, when you go and look at those homes, the first thing I have you do is do a walkthrough. And if you're a couple, I'm going to separate you. One's going to go one way, one's going to go the other way, and then we're going to meet in the kitchen. When you meet in the kitchen, you're not going to say anything, but you're going to give me a number 1 to 5. 5 is, I need this now. 1 is, I'm going back to the car. And you would be really surprised how often a husband will say 5, and the wife is like 1. Okay, well, that's not the right house. Next. So it's real important that everyone has their opinion and everybody understands what your goals are. And then after the first few houses, reality hits and you start to have the real conversations about, you know what, maybe a basement isn't as important as we think it is at this price point, at this time in our life. You start to adjust, and that's part of the process. You need to go through a lot of homes before you decide what's good for you. And not just the structure of the home, but where's it located? What are the schools like? Are you going to grow into it? You know, is it eventually going to become an investment property when you move on to your second home? There's so many different things to think about, but that's my job. My job is to make sure that I'm being a good teacher and pulling you through the whole process. So at the very end, when you do find the one, and then I fight to get that for you, and then Blakely has the pre-approval letter, we're a strong candidate, we have a clean offer, and we go for it and we win it, and then we get to the table, it's completely seamless as you go through closing. That's our goal. Now, does it always happen? Are there hiccups? Of course. I mean, you're buying a house, things happen. You're dealing with people. Anytime you deal with people, stuff happens, emotions get in the way. But it's our goal to keep it all between the navigational beacons and make sure we get to the table, getting you what you want. And most importantly, what you can afford. No one needs to be house poor. Am I right?
So, Joanie, we'll go back to the how much money question, since that's the biggest one with purchasing. So you guys know kind of how the process works as far as connecting with Joanie, connecting with me, and then you're out shopping. You have your pre-approval letter, you're shopping. We'll talk about, before we end, the importance of a pre-approval letter. But I want to go back to the cost right now and how much money. So first-time home buyers, and any kind of home buyer who hasn't bought recently, has no idea as far as how much money they need. What do they need as far as cash to close? What do they need to be expected to have up front? We have a lot of first-time home buyers that think down payment, and they think, okay, when I go look at this house, I have to have that down. I have to have that money, because they don't know. So you, like I said, you could have as little as 3% down. So you do not have to have 20%. You do not have to have 15%. You could have as low as 3 to 3.5% down. As far as the closing cost, they will vary depending on the property, the taxes, the insurance, the sales price, but we typically estimate closing cost as an additional 3% of your sales price. So the closing cost includes your prepaids, your escrow, and let me just tell you what those are items that they'll be held in a separate account, an escrow account, and your taxes and insurance will be taken out of that escrow account and paid for the year. So you have to have an escrow account unless you're putting 20% down, period. So with the escrow account, when the taxes and insurance are due for the year, they come out of that account. So as a first-time home buyer, you don't have to write a check for your taxes at the end of the year. So they're estimated up front, which is why I say an estimated 3%, depending on the county, depending on your homeowner's insurance quote. The closing costs can change slightly, but 3% is normally a fair estimate as far as what they come out to. Again, with earnest money, and me and Joanie were just on a call with a client right before this. With your earnest money, a lot of people don't realize as first-time home buyers that you get credit for that towards your down payment and closing cost. So earnest money is normally 1% of the sales price. So if you're buying a $200,000 house, you can expect your earnest money to be $2,000. Well, if your total cash to close amount, which includes your down payment, is $12,000, you're going to get credit for that $2,000 of earnest money that you put towards the transaction at first. So instead of closing costs being $12,000, with your $2,000, they would now be $10,000. So it's not total closing costs plus the down payment plus your earnest money. Anything as far as the loan transaction that you contribute up front that the lender sets up as far as appraisal, which is typically about $500 to $550, and the earnest money you will see be deducted from your closing costs. So you do pay for the appraisal up front because it's a third-party servicer that completes it, but you get credit for the earnest or for the appraisal money that you've paid up front off of your closing cost. Same with the earnest money. You give it up front, we document it, you get credit for whatever your earnest money is off of that total cash to close number.
I think this is amazing that we're doing this. I really do, because so many, not just first-time home buyers, a lot of this gets lost in translation, but people have been through it so many times, they're like, I know it's going to work out. It'll be at the bottom of the sheet and the numbers will match. But to understand that it's a credit with your earnest money and your appraisal towards your closing is huge to understand that.
Yes. And like I said, this is in this market. So if we're asking the seller to contribute towards closing costs, which is sometimes an option, a lot of clients have heard that in the past. So they think, oh, we're going to ask the seller to contribute. That is a whole nother thing. If a house is just listed and they have 27 offers on it and you're asking for a seller credit, I'm certain there's 10 ahead of you where there's no seller credit asked for. But if a home has sat, and I just actually got this question a little bit ago before our Zoom call, if it has sat for a little while and there aren't multiple offers on it, you are able to get a seller contribution. It's part of yours and Joanie's negotiations. And if the seller agrees to contribute, sometimes, like I said, it's kind of tough in this market, but sometimes you're left coming to the table with just your down payment amount. Yeah. If the seller contributes towards your closing costs, then you just have your down payment amount that you're responsible for. Your earnest money counts. So if you're putting 3% down, your earnest money will count towards that. And then you're left bringing very little to the table once you get your appraisal money refunded and then the earnest money as well.
Exactly. And a lot of times when I'm working with first-time home buyers, the budget, is obviously really important. I will go and look for homes that have been on the market for more than 25 days. Because in this market, if it's been there for 25 days, then they're going to be looking to wheel and deal. They're going to be fatigued. They're going to be anxious. And they could possibly split closing costs or reduce the price. Or that's when we start playing with negotiations as far as closing costs and the value of the home. So it's possible to do, but that's where I come in. But again, the most important thing is to make sure we focus on your monthly payment.
Yes. And Joanie, like Joanie was saying, as far as the seller credit, we have had many clients who are first-time home buyers straight out of college. They have their 3% for their down payment saved, but they're kind of short as far as cash to close. Joanie immediately knows to look for homes, like she said, that have sat for a while so that she can get a seller credit. Because we know as the lender and the agent, this borrower cannot afford to put the full down payment amount, contribute the earnest money, and pay for all of the closing costs. So Joanie knows to be looking for properties that have sat for a little bit longer so that we have more room to negotiate getting some kind of seller contribution to help our client with the cost.
Exactly. So let's break down what some of these definitions are. When we start talking about LTV, you and I throw those terms out all the time. So let's explain what an LTV is.
I'm sorry. I probably said LTV about 18 times and you guys probably have no idea what that is. So the LTV is the loan to value. So for instance, if I say their LTV is at 80%, that means the loan to value is at 80%, which means the client is putting down 20%. So with, let's just say the conventional 3% down program, you're putting down 3%. So your loan to value would be 97%. So with the different loan programs and the different loan to values, the interest rates kind of vary. And as crazy as this is, at a 80% loan to value, so you're putting down 20%, the interest rate is going to be a little bit higher than what it would be if you're putting down 25%, because the loan to value changes. So when we're working on getting someone qualified, which we're dealing with now, we'll show them a conventional 3% so they can see the 97% loan to value. And then we may show them the FHA 3.5% down, which is a 96.5 loan to value, because the interest rates and the cash to close and all the finalized figures, monthly payment, are going to vary depending on the program type and the loan to value. So when we say program type, there are 4 main programs. The top 2 are conventional and FHA. Most people have heard of those 2 programs. Conventional is the one we've kind of talked about, where the minimum down is 3%. FHA, the minimum down is 3.5%. So you have to have at least 3.5% and contributed towards the transaction for the FHA program. The other 2 are VA, which is for veterans. You have to have a DD 214, or we'll get a certificate of eligibility to verify your entitlement and how much of a VA loan you're able to qualify for. VA is 100% financed, and VA and FHA are both government loans, so their rates are typically a little bit lower than our conventional programs. There's also the 4th one is a USDA, which is not as common. It's more for rural areas. So you can't purchase, in the middle of West Cobb or the Marietta Square, downtown Kennesaw, and use the USDA loan. But the USDA is 100% financed, which means you don't have to put anything down. There's financing assistance, but there's certain income limits, and you do have to plug the property into an eligibility map to verify that it's eligible for that USDA home loan. So those are the 4 main types that we deal with. And like I said, depending on if they're government or non-government funded loans, depending on what our loan to value is and how much we're putting down, depending on what the credit score is, the credit score 99.9% drives the interest rate. So if you have a 640 credit score or you have a 740 credit score, you're going to see a large difference in the interest rate due to, having the higher credit score. The higher the credit, the lower the rate. The lower the credit, the higher the rate.
So likely when I look at an offer, when I have a listing, the first thing I look at, obviously I care about the offer price, but I look at the LTV. How strong of an offer is this person bringing to the table? And that LTV is almost like the secret code to, is this a strong offer? So when I'm taking my buyers out, I want to make sure with Blakely that this LTV is buttoned up so that on the other side, that agent knows that we're a strong candidate.
Yes. And so like Joanie's saying, obviously a lot of first-time home buyers are not going to be at an 80% LTV. They don't have 20% to contribute at a 200,000 price point or a 250. So a lot of times, to make you more competitive as a team, once Joanie has talked to the listing agent, you guys have provided your offer. There's different exhibits that are submitted with the offer and contingencies and all of this, depending on the loan program. But once your offer has been submitted, Joanie always, and not all agents do this, but she provides me with the listing agent's contact information, which many, many times in the past has allowed us to win the deal. Even if we're neck and neck with another offer, we've actually won the deal with somebody being a little bit higher than us because Joanie has her lender reach out to the listing agent. So I do not offer any kind of financial information or anything that's confidential to the listing agent, but we do go over the approval. All of our clients have gone through a pre-underwrite, income, assets, everything has been verified so we can get the loan, go under contract, and as soon as we have the appraisal back, we're clear to close. Going with a lender and an agent that follow that process is huge. These online lenders, you can get a pre-approval or a pre-qual letter by plugging in your income, your assets, your credit. A lot of people don't know what their income is. They don't know what their credit score is. And then the automated system just generates a pre-qual letter. Well, these listing agents and buyer's agents know this. So when they see an offer from Rocket Mortgage, they know, okay, they've just gone in. It says on the letter that income, assets, none of that have been verified. So a lot of times, since it's not a local lender that they know they can contact and that the information is probably not accurate, they toss that one and go to the next offer. So with having a team, Joanie, who's here and local, having a lender that's here and local, we're going to fight for you regardless of if the LTV is at an 80% or at a 3%. And we are going to paint the picture to the listing agent to let them know that our client has been through a pre-approval, a pre-underwrite, and they're ready to rock and roll.
And let's talk about the fact that we get real passionate about our people. And when we get a VA client, oh yeah, I love a VA loan.
VA is probably one of my favorites, and I should not say that, but I love VA.
It gives me chills. It gives me chills because that's a gift for service, and it's 100% guaranteed and backed by the U.S. government. That's fantastic. I mean, when I get VA offers, I'm like, yes, please, this goes on the top. I mean, this is good stuff. This is awesome. But it's not always that way. And I think that's because of lack of understanding on the agent's part. Do you agree?
100%. Yeah. So a lot of people look at the government loans, which are FHA and VA, like we talked about. Since they're funded by the government wants to verify that the home is in good standing, that everything is operating correctly. And listing agents kind of scare away from that because they think that, oh, since this is a government loan, since it's VA or FHA, the appraiser is going to be more strict. You know, they're going to notate things about the home that they wouldn't conventional. And that is not the case. With VA and FHA, all they are doing is protecting the client, which is our job as a lender and an agent as well. So they're not trying to not get the client to be able to purchase the house. If there are things that could pose a healthy or safe issue, then they're going to notate that and it's going to have to be repaired. But as far as the appraisals, a lot of people think that the appraisals come in less because it's an FHA or a VA loan, and that is not correct. If it comes in less, which is called Tidewater, if an appraiser comes back and says that the home is not worth the $300,000 that we're under contract at, that's called evoking Tidewater. Our agent has 24 to 48 hours to provide additional comps. If the value does not increase to where we are, then the house is priced too high, period. So exactly. This is the VA protecting their veteran client and saying, we're not funding this loan because this house is listed for way more than what it's worth. We've pulled comparables. The agents provided additional comps and the value's not there. So they're protecting their VA client. We've had many, many VA loans come in over value, and we've had them come in right at value. Most of the time, you know if it's going to be short because your agent and Joanie has pulled the comps and she knows, okay, this home really is probably only worth this much. So we're going to offer this because otherwise they're going to evoke Tidewater. Some agents would let you just go offer whatever, just assume Tidewater is going to be evoked. But Joanie pulls comps in her area where her client is offering to verify that your offer is a strong offer and that we're not going to have a short appraisal.
Yeah, and we never have. On all of our VA, it really has not been a big deal at all because we've done our homework. And we've established a strong offer that's an equitable price for the property. And you just go about your happy way. It's not a big deal. If you're doing your job the right way, it's not a big deal. It happens, but most of the time, if it's a well-priced home and you put in a good offer, then you're good. So that's
and the appraisers say all the time, they're nice people just like you and I, and they want the veterans in a house. I mean, they feel the same way about the loan that we do. So we just had one recently. where the sockets in the home weren't covered, the electrical sockets, and that was notated. Now, Joanie would go out and put sockets on the house if it meant we were going to lose the deal. But both sides understood, and they, the family purchasing has young kids, and whether they do or they don't, the electrical sockets have to be covered. So whereas conventional may not notate that, VA is going to, because that's a safety hazard. So that's just kind of an idea of things. 9 times out of 10, it's things that are very, very easy to fix. They don't kill the deal, and we continue to move forward. But there is kind of a negative connotation. I mean, people with VA or FHA sometimes do get turned down, but it's lack of understanding because the listing agent doesn't understand the VA or the FHA loan and thinks it's going to come in short, or that we're going to have issues with inspection and appraisal. And 99% of the time, that is not the case.
Right. And if I'm representing someone who has a VA loan, the first thing I'm going to do is call that agent and make sure that they understand and have a teaching moment about a VA. And if I, in that conversation, and I realize the agent knows what they're talking about, then we continue on our way. But it's just real important to spend the time and to build a relationship on both sides of the table for the common goal. Sellers want to sell, buyers want to buy. And that's really, it's all buttoned up in the end, is like that's what you want. You want to get to the table. And there's no reason not to have it be amiable all around. And it's really fun. It's good.
So like Joanie said, just as like a recap, because we could go on and on and on for hours and hours. So you connect with Joanie. Joanie connects you to the lender. We go over everything. So you're comfortable with closing costs, down payment. You understand what your earnest money is. You understand what your appraisal is. We've gone over different types of loan programs. So okay, we thought FHA was going to be best for us, but really the conventional 3% down program kind of looks like it's going to be a better option. We go over interest rate, pricing, all of that. You are ready to go, and you have your pre-approval letter. The importance of this, we cannot stress enough. People don't understand unless you start shopping in our market. Things are flying off the shelves. You can look at a house today. You can love it. If you're not submitting an offer, there may be 12 offers by the time you wake up in the morning. So the reason we push and push and push people to get pre-approved is not because I love just swinging pre-approvals and I want you to do that before you look. If you do not go into a home with a pre-approval letter, or if you don't have that to submit your offer, the listing agent, especially in this market, is not reviewing that offer. If they don't see that you've had time to go get approved through a lender and that you already have that pre-approval letter and that you're ready to go, then they're going right on to the next offer. Also, a lot of people, like I said, going back to not knowing the income, not knowing the credit, not knowing exactly how much you have in assets. Sometimes that messes you up as a buyer because you may be thinking that you can qualify for a lot more based off what you've calculated. And Joanie could be showing you $400,000 houses. And when you actually go through the process, you may only qualify for $320,000. Well, looking at a $400,000 house and having to bump that search and the criteria for those homes down to $325,000, it's going to be different. It's going to change significantly. So we only do everything up front to help you guys. We want you to be as strong and as competitive in the market as possible. And taking these steps, solidifying your agent, having your lending and all of your financing in order, having that pre-approval letter, you will feel much stronger as a buyer and confident as a buyer, knowing, okay, I can go to this neighborhood, and if I love this house, here's my pre-approval letter, here's my agent, we're going to write an offer, and you could be under contract within the same day. Not having a pre-approval or an agent, you're running around chasing your tail, and it's going to be very hard to go under contract on something without all of your ducks in a row, especially in this competitive market that we're currently in.
Absolutely. Well said. And it's fatiguing. Nobody wants to go shopping and not be able to afford what they're looking at. That's depressing. You want to make sure you're in the right spot and it's a positive experience and you don't get fatigued. Because when you get fatigued, you don't make good choices, and that's my job to make sure that you make good choices. This was again, we could talk all night, but I think we really hit it home on first-time home buyers, what their expectations should be, and what their mindset should be in regards to going into this. And what it really boils down to is just what you said. You need good partners and you need great communication. And Blakely and I kind of like each other, so we talk anyways.
Yeah, so, whether we have deals going or not, we are friends outside of this business relationship. And we're both here, even if you haven't signed a buyer's brokerage or if you haven't done an application for financing, we're here to kind of, help you bounce different ideas around or run different scenarios. If you're not sure what your house is worth, but you're thinking about, you may be interested in selling and purchasing, Joanie can do a CMA, which is a market analysis, and pull things together so you are educated. Our job is to help you be educated in this market. So after this call, if you have a couple additional questions or you want to connect with one of us, we're more than happy to answer any questions that you may have in regards to real estate or finance or all of it.
Exactly. And we always come from a perspective of teaching. Blakely has teaching in her blood, as do I. So that's just how we're going to roll, no matter what. Before I completely lose my voice, thank you, sweet friend, for jumping on here and helping me educate my people, your people. We are truly 24/7 people. Yeah. There is no downtime for us, and I wouldn't have it any other way.
I've tried to get Joanie not to do this Wine Wednesday because she's not had a voice at all due to COVID, but she was not missing it.
I'm not missing it. I don't have to be gorgeous every time. It's too important. And I currently have too many people in this situation. They needed to hear this. They needed to hear it collectively. So thank you, sweet friend, for carrying this for me.
Absolutely. And Joanie, you have a place you can post. I think I posted my stuff in the private chat.
Yeah, let me grab it.
And I just threw my cell phone on there. All of my clients get my cell phone. So you can text me, call me. I can shoot you a text with my email address if it's easier to email. And then we're happy to help you guys.
Hold on, baby. I got you. I got you, babe.
I can't comment as a guest.
I got it. There it is. Coming at you.
Bam.
It's a little slow, but it's coming. There's Blakely's number, 404-783-9304. As always, thank you guys for being here on Wine Wednesday. And it's an exciting time in real estate. There's some cool things happening. We're both geeks about it. So if you just want to talk about real estate just for fun,
call us.
Awesome. All right. Joanie Bates with Keller Williams Signature Partners and
Blakely C with Certainty Home Loans.
And we'll see you soon.
Yes, everybody stay healthy. Have a great night.
Seriously, don't get this. It's not fun. Not fun. Smooches, babe. Talk to you tomorrow.
Bye.
Bye.